Well, and yet another indication of the declining economy, the real estate market continues to cool off. Mortgage rates are climbing, and in recent months, home sales have declined in a number of times. Now, let's talk about the latest news now with Emily McCormick. Emily, we're learning of some big-time layoffs in the real estate industry. What are you learning?
Well, Dave, the slowdown in housing market activity you were just alluding to is now leading to layoffs at some major real estate companies. The real estate brokerage Compass said in a filing today that it plans to lay off about 10% of its workforce, or about 450 positions. Now, this is part of a set of strategic actions that Compass expects will help streamline costs. But in the near term, Compass does expect that this will contribute to pre-tax costs of between $21.5 and $23 million in the current quarter. Now, that stock is down about 11% on an intraday basis in the wake of this announcement. And it's a similar story here for Redfin Corporation. That firm also said that it's asking 8% of its employees to leave the company as well. And Redfin CEO Glenn Kelman said, quote, "We could be facing years, not months, of fewer home sales." Now, these latest announcements by two major real estate firms really signal that the layoffs and hiring freezes that we've been seeing hit tech and crypto companies are now broadening out to the once booming real estate industry. And for these housing-related companies especially, it's a sign that housing market activity may be resetting lower for some time going forward, guys.
So then, Emily, in addition to those company warnings you were mentioning there, what is the housing data suggesting about what's lying ahead for the real estate market?
Well, Rochelle, the data hasn't been particularly encouraging. Last week, we saw mortgage activity hit a 22-year low amid rising interest rates and persistently elevated home prices. And in recent weeks, we've also seen new data showing existing and new home sales each falling to their lowest levels since 2020 at the height of the pandemic. Now, all of this is really pointing to the challenges the housing market is facing, especially on the demand side, as buyers and refinancers are increasingly turning away at the sight of these higher rates and prices. Just last week, we saw the rate on the average 30-year fixed-rate mortgage rise to 5.23% when it was around just 3% during the comparable week last year. But interestingly, again, even as rates have been creeping higher and demand has been cooling based on these sales and applications numbers as of late, prices are still high, and the median home listing price was at a record of over $391,000 across the U.S. in April. So really, until we start to see these prices meaningfully follow the downward trend of demand, there's likely going to remain this cap that we're seeing on housing market activity in the near term, guys.
A big thank you to our very own Emily McCormick there. Well, David and Shauna, as we're seeing, though, house prices still high. And, you know, if you're a renter, you're also still seeing rents. We saw that they hit over $2,000 in May. So you're really stuck between a rock and a hard place. Shauna, what's your take on how you think new home buyers are really taking in all this data?
Well, I think it's a tough decision. I think we're seeing that play out right now in the market when you take a look at the fact that supply is steadily increasing, albeit very slowly, but people are waiting on the sidelines. You have the higher mortgage rates that Emily was just talking about, the fact that home prices are still extremely high when you compare it to historical levels. Many first-time buyers are being forced to stay on the sideline because they simply can't afford the price of an entry-level home at this point. So I think there's still some correcting to be done in this space. Exactly the extent of it is one of the worries here. When we talk, Dave, to a number of economists and market strategists over the last couple of days, it's one of the things that they are worrying about when they talk about the possibility here of a recession and how the housing market could play into that.
Yeah, and Shauna, you often hear some analysts talk about a bubble bursting. And again, largely speaking, the real estate industry is just very relative wherever you happen to be. But the real estate agents I talk to across the country on a fairly regular basis still say they are seeing houses fly off the market for cash, above list. So in a lot of these hot markets, they are not seeing any signs of a bubble, maybe a bit of cooling over the summer months. But look, there's just so little inventory, and there's not a lot of inventory coming onto the market anytime soon based on supply chains and based on the cost of all this. So again, it's natural and it's probably positive that we're going to see a little bit of cooling off, but I don't see anytime soon any type of bubble bursting. Now, if you have cash, and you are a cash buyer, which shockingly 20% in the city that I'm from, Denver, Colorado, 20% of home buyers in the last year are cash buyers. You can't afford to sit back and wait for those prices to drop a little bit. But you made a good point. It's those first-time home buyers that are really between a rock and a hard place at the moment.
And like Barbara Cochran says, you might have to just get into a house. It might not be the one you want, but at least try and get in the game.